morning, welcome to the Australian Early Finance Briefing for Friday the 6th of November. My name's Nick here in Melbourne, starting with the US and the enormous rally we saw in the Nasdaq yesterday, up almost 4%, whereas the Russell was barely moved at all. So a huge divergence there. We saw rallies in all the big sort of popular tech names, the Apples, Teslas, etc. And there's a lot of conjecture as to why this has happened. I ended yesterday's show saying, this wasn't meant to happen. If there was a gridlocked outcome, then we should see, the markets react negatively. That hasn't happened. And there's certainly a few theories floating around as to why this is going on. One is the Democrats won't be able to launch the huge stimulus package. Therefore, the yield trade in the bond market, we saw yields rising due to inflation fears at the sort of 10-year range and further. That won't happen. Therefore, we saw yields collapse yesterday in terms of the effect of that, rates on pricing, cash flows from growth stock. Obviously, the valuation, using a dividend discount model type approach increases the valuation of these growth stocks considerably. There's that theory. One of the other main ones is this sort of technical thing, and that's the fact that the market, which I think is more plausible, or certainly a bigger contributor, is the market was very much hedged against a crash, and we saw that in the implied vol in the options market. That soared up in the sort of week up to November the 4th. Lots and lots of investors were hedging themselves against a collapse. Now, as that hasn't happened, a lot of these sort of put options and that investors were buying and dealers were hedging by shorting stock has just got wound up. Those positions have been wound up. Therefore, the shorts are closing. Therefore, closing shorts means buying. And that means the short interest we've seen was at record highs prior to the election. That has dropped since. We've seen VIX collapse since, which once again plays into that thesis that people were just buying lots and lots of options, which obviously the more popular the options are, the higher the implied vol gets, the more expensive the options are. And so we're sort of seeing, once again, a melt up rather than anything else. And it's everyone closing these shorts. And it certainly seems to be that way in terms of the rapid shoot up. A 4% rise in any sort of index is very rare. A 4% drop is rare, but not as rare. And it seems more like, you tip the chart upside down and it would look a bit more plausible. And moving back into Victoria, we've got a big battery announced yesterday. Lily D'Ambrosio, the State Energy Minister, announced a 300 to 450 megawatt hour battery being built near a substation in Geelong. That's over double the size of the one built in South Australia last year. Now this battery is in megawatt hours, 300 to 450 megawatt hours, as opposed to the way a lot of the media quote battery capacity in megawatts, which is not something that you can measure a capacity. It's not a unit of capacity, that's a unit of throughput. So you have to add that time dimension in there. Now, this has caused a bit of uproar in the national energy market. The East Coast has a cohesive national energy grid, and you've still got this sort of odd play going on with the states being able to sort of slap on and do what they want, even though we'll obviously have ramifications for everyone. So it does seem a little bit inconsistent, and once again, more constitutional issues that we see arising more and more in the Australian sort of environment these days. But it does sort of go against Angus Taylor, the Federal Energy Minister, who's, dare I say, probably supported heavily by the gas lobby and certainly the federal government's COVID recovery commission's full of gas executives. They want to put more gas peaking plants in, and this battery essentially can match that. And as the chairman of Tesla, the global chair, Robyn Denholm, who was an exec here at Telstra in Melbourne, she's now the chair of Tesla. She said that this humongous battery installation would be the size of the gas turbine, essentially implying that watch out gas, we're coming after you, and this is up there with it. Obviously, 300 megawatt hours isn't a lot. It's 300 megawatts for 1 hour, and that will not mean it can run all night or anything like that, whereas a gas peaking plant obviously can. So it does have that sort of level of downside, and people are arguing that this will cost a lot more. Angus Taylor indeed said batteries are not a cost-competitive option to replace gas and hydro as firming for renewables, or coal as the provider of baseload power. Yeah, we know that, but it's certainly a promising sign and something that we'll see much more of as the prices of batteries keep collapsing and their life, durability increasing hugely. And moving back to the US now, SPACs, special purpose acquisition companies, a topic we've covered a bit recently. They've gone through an absolute boom this year. According to Bloomberg, 166 SPACs have been listed, and there's been $61 billion raised, which, comparing that to the entire SPAC issuance up until this year, that was only $72 billion. So they've almost doubled in total size just this year. Why is that? They're typically a way to a quick buck. They always have performed well, and investors love them. But what we're starting to see now is a few sort of cracks in that, and Bloomberg's expecting that there'll be less issuance going forward for sort of three main reasons. One is sort of just too many of them, and there's not enough acquisition companies. So these SPACs are sort of looking around for non-listed companies to buy, and there's just not enough of them there. First thing. Second thing is mutual funds and those sorts of things that have been buying into the SPACs have reached their sort of allocation limits. There's just so many that they can't buy anymore in their funds as a risk management measure. And then thirdly is that they're just not performing strongly. So according to Bloomberg, 60% of the SPACs that listed in October are trading below their offer price. So that sort of momentum effect may sort of deter investors getting into them going forward. And moving to the markets now, about 90 minutes before the US Open, the S&P futures are trading up over 1%, looking like we'll see another bit of a melt up continue today in the US markets. Here in Australia, we have the RBA minutes released at 11:30 Eastern Daylight Time. Other than that, obviously the election results to look out for. That's your update for Friday. Have a great day.
This podcast is for investment professionals only and should not be relied upon by private investors. The podcast is provided for informational purposes only and does not constitute financial advice. The values of investments can go up or down, so you may get back less than you initially invest.